The bond market right now is beautiful.
I'm the king of debt. I'm great with debt. Nobody knows debt better than me. I've made a fortune by using debt.
Balance the federal budget. We're going to balance it.
I am the chosen one. Somebody had to do it.
Bonds. Most people have no idea how important government bonds are to the economy. Bonds are the backbone of your investments, pensions, insurances, and even more. Since Trump returned to the White House, we have seen a new global trade war, a stock market crash, and plenty more drama. Despite all this, we are still not officially in a recession. So why are bond markets in such trouble? What changed? Short answer, Trump. Long answer, we'll get into that. Historically, U.S. Treasury bonds have been the safest investment known to man, an asset that represents virtually zero risk and a guaranteed, albeit small return. However, with Donald Trump at the helm of the world's largest economy, cracks in the bond market are beginning to widen. Maybe electing a man who specializes in bankruptcies was not the smartest decision.
I have never gone bankrupt, by the way. I have never. But out of hundreds of deals,
but sir,
excuse me,
that's your line, but your companies have gone bankrupt.
If the bond market truly collapses, the damage would be unimaginable, especially as the USA is holding almost $37 trillion in federal debt. But it's not just me saying this. The world's top CEOs and investors like Jamie Dimon, Ray Dalio, and even Elon Musk are all warning the same thing.
And you are going to see a crack in the bond market, okay? It is going to happen.
This is not just an American problem, but a global one, and the alarm bells have already been sounded. Most governments right now, especially the USA, are badly addicted to spending. Trump's spending plans alone is expected to add $8 trillion to the federal debt by 2035. As you know, more spending means more debt. Global government debt levels surpassed $100 trillion in 2024 for the first time ever. To make things worse, government borrowing costs have also reached their highest level since the 2008 financial crisis. This addiction to spending is making investors more and more anxious. Bond prices of major economies all around the world have been falling to levels not seen since 2008. On top of this, Trump's trade wars and bizarre foreign policy are causing even more pain. Already this year, we have seen a huge sell-off in U.S. Treasury bonds. Normally, in times of economic uncertainty, these bonds are bought up like apples. The U.S. economy has been the world's most prosperous and stable economy since World War II, making it a safe haven for investors of all sorts. Thanks to Trump, this status has vanished. America is now better known for its fiscal irresponsibility and crazy levels of debt. In 2016, Trump promised he could eliminate the entire federal debt, which was $19 trillion at the time, within 8 years. Surprise, surprise, by the end of his first term, Trump added $8 trillion to the debt. Remember, friends, never trust politicians. In order to get the money it needs, governments issue bonds to investors promising to pay them back with a little bit of interest on top. In its entire history, the U.S. government has never defaulted on any of its debts. Even the possibility of a default was unthinkable. Back in the day, debt was a lot cheaper as interest rates were kept extremely low after the 2008 financial crash. Despite all the damage and the small returns offered by bonds, investor demand actually increased. In fact, while the U.S. stock market lost half its value, bond markets surged. Investors were dumping riskier assets as fast as they could in exchange for government bonds, a very safe asset, until now. To stimulate the economy after the 2008 crash, the Fed, which is the central bank of the USA, set interest rates at a record low of 0.25%. The idea was cheaper borrowing costs would encourage more spending and investment, which would create jobs and improve living standards. This was also good for the government as cheap finance allowed them to pump billions into the economy and end the recession quicker. President Obama's 2009 Recovery Act set aside $831 billion for a whole range of areas like infrastructure, healthcare, education, and even tax cuts. These measures were certainly successful as unemployment fell and GDP recovered much faster than Europe and other major economies. However, all this spending kicked off a debt spiral. During Obama's presidency from 2009 to 2017, the federal debt increased by more than $8 trillion, the largest dollar increase of any president in history. Trump, in only his first term, added just under $8 trillion to the debt. That's in half the time Obama had. Most of this spending was thanks to the coronavirus pandemic. The damage caused by these recessions was huge, yet investors were still more than happy to buy government bonds since they were confident they would be paid back with a little interest on top. If interest rates had stayed low and investors remained hungry for government bonds, All this debt may have been manageable. However, all that government spending combined with the fallout from the Russia-Ukraine war created severe inflation. Thus, interest rates had to be raised, peaking at 5.5% in 2024. All of a sudden, servicing that debt became a whole lot more expensive. Now, annual interest payments by the U.S. government have surpassed $1 trillion. This accounts for almost 20% of all its annual tax income. Annual interest payments have even surpassed the USA's defense budget. These payments could reach $2 trillion a year by 2028 if interest rates remain high. To add to the misery, $3 trillion worth of government bonds are set to mature in 2026. That is more than 40% of the U.S. government's entire annual budget. Imagine 40+% of your budget going only towards debt. That money could be spent much better on improving the welfare of U.S. citizens instead. Year after year, president after president, this burden is only set to become worse. Trump has promised to tackle the national debt, but no sane person believes him, especially seasoned investors. The same man who claims to be financially conservative has also just pushed through his big, beautiful bill set to add more than $3 trillion to the national debt. After the bill's passage through the House, bond investors started dumping their holdings. Trump's stupid policies now means that investors see bonds as riskier assets, which reduces their demand. If this sell-off continues, bond prices will fall even lower. As a result, the U.S. has to increase the interest rates on its bonds to calm investors down. Higher interest rates make borrowing money even more expensive, not just for the government, but also for private businesses and normal people. This may lead to austerity measures like increased taxes and lower government spending, hurting working-class Americans the most. More expensive debt can trigger a wave of bankruptcies, unleashing massive economic consequences. As borrowing costs rise, businesses of all sizes find it increasingly difficult to refinance existing debt or take on new loans. For highly leveraged firms, especially in sectors like real estate, retail, manufacturing, and tech, this can rapidly destroy their profitability. When revenues are insufficient to cover rising interest payments, defaults and bankruptcies become unavoidable. This domino effect can lead to mass layoffs as companies close their stores and enact aggressive cost-cutting measures to stay alive. Layoffs would not only affect direct employees of bankrupt firms, but also throughout the supply chains and service industries that depend on them. Small businesses with less financial muscle are particularly vulnerable. Even for businesses that survive the initial shock, the long-term consequences will be severe. Rising debt servicing costs force companies to redirect money away from expansion and innovation and instead focus on cutting debt or saving money. This leads to a sharp decline in business investment, which means lower productivity and wage growth. Without fresh investment, economic growth slows, making recovery more difficult. As unemployment increases, consumer spending plummets. Families cut back on spending, further reducing demand across sectors. This drop in consumption means less revenue for businesses and even more financial pain. Over time, these failures erode investor and consumer confidence in the broader economy. Institutions such as banks, pension funds, and insurance companies, holders of trillions in U.S. treasuries, would face massive losses if bond values were to collapse. A sharp decline in the value of these assets would worsen their liquidity, potentially triggering a bank run as consumers rush to withdraw their savings. In the worst-case scenario, this could collapse the entire banking system. Moreover, foreign investors and central banks also hold trillions in U.S. government bonds. Thus, the effect of a bond market collapse would be global. This wouldn't just cause a recession, but a catastrophic depression, especially since governments can't spend their way out of trouble like old times. The U.S. dollar would also lose much of its value. Imports become much more expensive for Americans. Given the USA's heavy reliance on imports, everything from electronics and cars to food and medicine will become more unaffordable. This can eventually lead to hyperinflation. Families would struggle to make ends meet. In the long term, the dollar could even lose its status as the world's currency reserve, which would have a huge impact on geopolitics. Unfortunately, politicians like Trump do not care. They are only concerned with maintaining their own power and wealth. The bond market may seem like a distant corner of finance, something only for economists and investors to worry about. But the truth is, it is the foundation of everything, the entire global economy. Bonds quietly uphold the financial system that supports your job, your savings, your retirement, and the very functioning of government itself. And right now, that foundation is cracking. What we're witnessing is not normal. It is a warning sign, a signal that decades of reckless fiscal policy, fueled by stupid politicians and their short-term thinking, are reaching their breaking point. Under Donald Trump's leadership, The U.S. has not only accelerated its spending spree, but also begun destroying the once ironclad global confidence that makes its global dominance possible. He promised to drain the swamp. Instead, he's flooded the markets with panic, debt, and distrust. If this continues unchecked, the consequences won't be limited to Wall Street or the White House. They will cascade throughout the world. Bankruptcies, job losses, stock market crash, dollar collapse, and eventually, the end of America's global supremacy. Investors around the world are waking up, and it won't be long before the public does as well. If we continue down this path, then the next collapse won't just be financial. It will be disastrous, and it will be our problem to deal with, not the old man Trump. Thank you very much for watching. Please subscribe to the channel, and we will catch you in the next video.